Hello, hello, you guys. How is everybody's Friday this morning? Welcome to the Daily Plan. I'm your boss, Joe Boss. Man, oh man, it was a choppy couple of days here, huh? I thought something was going up, it went down. I thought something was going down, it went up. Except for the equity side of things, those calls on the equities have been pretty straightforward. That and the gold trade from earlier this week, that one did well. We had bullish expectations for gold going into this week, and we had bullish expectations for our S&P, and that did okay, right? The 45.80 spot there. Looks like NASDAQ didn't cross this trough right here. It didn't get far enough. Yeah. Sucks, but this sort of thing doesn't happen all that often. Hey, Robin. I had to take a position on Eurodollar long today. Guess was too early. Yeah. We'll be doing something special today. We're going to be going over a bunch of week ahead outlooks. And actually, a lot of those week ahead outlooks are especially risk off. There we go. So this is one on Australia and New Zealand, but because you asked about Europe, let me go ahead and see if we can find. Here we go, Euro USD. Hence, the short-term outlook for Euro USD is less clear and highly data dependent. On soft but not weak data and no pushback from the Fed, we expect Euro USD to continue to strengthen. The outcome is, though, binary to a soft landing. Euro-dollar approaches versus hard landing. Yeah, I remember we pulled up this chart when SEB released their FX pilot. So things are pretty choppy right now, and we can even pull up the Euro-dollar here on the left. And you can see just how bad it's been getting. I remember I had bullish expectations going into that economic release yesterday, and it's just been, I mean, I know, for example, Westpac, they've been taking longs this whole spy here. They keep sending updates saying that they're taking long shots. And then there's all these other institutions. They are saying, oh, we're buying this, we're buying this, we're buying this. And I'm like, well, how much of it are you buying? Because quite clearly it's not significant enough. So I was kind of curious, why on relatively risk-on economic information out of the United States did this Euro-dollar move lower occur? So I looked around, and it seems like the reason for the dollar appreciation here was because the probability of rate cuts, the pricing in of rate cuts from the ECB going into 2024 just got pulled closer to today. So they're right now, a big driver for the Euro-dollar was that maybe the ECB will stay on hold for longer than the Fed will. But it turns out now, after something happened with the economic data that's come out. And by the way, if I pull up Euro-dollar here real quick. Actually, I think I can just pull it up in the trade group because I have the full screen video going. Let's see here. Trade group, boss trades. Hit my alert. So you can tell I'm not lying here. Let's see. Yeah, there we go. I'm trying to zoom in here on my Discord. Pretty sure you guys can see that. Got a flip on my euro-dollar expectations. Economic data did not support euro-dollar and has now fallen significantly. Next peak for euro-dollar is around 108.5, so I'll expect we head to that location next. And looks like a daily low peak is in tomorrow's range, roughly around that spot. So that was the commentary from yesterday in the trading group. Let's go ahead and see if that has lined up so far. So this is that range. So let's see here. Yeah. My expectation, looking at this chart, is for the low on euro-dollar today to come in probably in the mid 108.6s. So I'll set right here, and maybe I'll take a shot there. I'm not 100% on it, but I think that looks like pretty good risk reward to taking a shot there, considering there's a lot of large institutions that I think would be underwater. Like this was a bunch of institutions taking hops in because they're like, oh my god, Bank of America was some of the most bullish. I think I mentioned them yesterday. They have a target of like 115 by the end of December. 115. That's like 600 pips from here. It's insane. Yeah, sort of. I mean, let me conclude the thought on. So right now, the net, the original expectations for euro-dollar was, we should go long the euro because they'll likely be on hold. The ECB will be on hold longer than the Fed because we're bringing up our Fed rate cut expectations closer to today than they were where we thought they'd be yesterday. Well, something happened over the last 24 hours. I still am not exactly sure, but I follow the market pricing for when rate cuts are changing and hike odds are changing. And I just checked it after the stream, an hour or two after the stream. I'm like, oh, that is not good. We might see some continuation lower there. And then you could see I made the post, hey, maybe we should target the next peak lower here. Things aren't especially constructive for euro-dollar pricing based off of a bunch of different things that maybe some models are taking into account. So yeah, it always sucks to get hit on a trade or two, but it's also good to know where your limits are and what information you should be taking into account, so that then hey, there's some new bit of information out here. I need to that kind of significantly changes my view looking out to things going into the future. I may need to change my expectations now. So just making sure you always got the latest data at the top of your fingertips and never being crazy behind on research and market moves. So then, if something starts moving in the span of an hour, 2 or 3 or 4, you should be able to figure things out within 2 to 4 hours, what's going on in a market, especially for discretionary retail traders. That's kind of a reasonable time window. But if it starts to take you're trying to figure out why euro-dollar moved up or down yesterday, still by the time of Wednesday next week, first off, by that point, it doesn't even matter what happened, why the move necessarily occurred, because it's probably not going to impact future market prices anymore. It's already been quote unquote priced in. But it just means you're just slow on your research. And you got to pick up. You got to get into reading this stuff and studying this stuff more seriously. I'm not going to necessarily show this, but that's a Moody's outlook. This is Westpac. There's an editorial out of here from Lucy Ellis, chief economist out of Westpac. She just got poached from Westpac, from the Reserve Bank of Australia. So Lucy Ellis used to work at the Reserve Bank of Australia, and now she works as the chief economist, the head honcho at Westpac, which is the largest Australian bank. Talk about a revolving door. But in all seriousness, for the largest private bank in Australia, you would want someone very knowledgeable about banking, and honestly, something who's worked at the Australian Central Bank is kind of qualified. So it's a bit of revolving door, a bit of who else are you going to hire? Yeah, Robin. I mean, it's really easy to get through this stuff. And with ChatGPT, it's very, very easy to be like, hey, let me copy and paste a bunch of text from an Outlook I don't understand and just chuck it into ChatGPT. And not necessarily ask it for a summary. You can ask it for a summary. But then say, hey, read this information, take it into account, give me a summary. But then start asking it different questions about the text you just gave it. Don't just ask it for a summary. Start asking like probing questions about, well, what would this mean for that economy? What would this mean for the outlook from this institution? How could this impact XYZ economic event asset class? Like once you start probing the AI with information, once you kind of preloaded it with a bunch of Outlook data, it becomes a lot more helpful, especially when you're just trying to get into doing the research. And while that all sounds advanced and like super cool and relatively easy to do, sometimes it's just easier to copy and paste the words you don't understand or the concepts you don't know, just to copy and paste those phrases and put them into Google and search around Google for like 5 or 10 minutes, learn what you need to learn, and then come back to the Outlook. Sometimes that's a faster experience than the AI thing, and that's how I've learned. Although, sometimes the AIs give very good insights, sometimes the AIs don't. It's still very mixed when it comes down to stuff like ChatGPT and like plugging it up with all this PDF data or economic outlooks data and trying to get it to do summaries and extensions and logical leaps on other assets and other topics, right? There are some private AIs that I know that exist at institutions. You know, there's the famous Bloomberg GPT, the Bloomberg AI. Essentially, that's just got all of Bloomberg's information loaded into it and every single economic outlook from every single major institution as data for training on. And apparently it's relatively okay. It's pretty good. And then there are some institutions that have, you know, banks, individual banks that have like in-house small AIs that are just trained on, you know, let's say you have a firm, it's been around for like 30 years. They have all this archival data on how the firm has done analysis with like weekly and monthly and quarterly and annually outlooks that have been written for like the last 30 years. And they have some guy in his mid-30s come in and use that archival data and plug that into an AI and use that to training an AI. So all the people who are senior or who are learning to become advisors at that group they can then talk with this AI that's effectively like the cumulative knowledge of the last 30 years of research at the firm. And it actually, it seems like a lot of people who've been using those models have been actually quite happy. I've been listening to a lot of AI stuff. It's been coming up in so many of my finance and like quant podcasts that I listen to. It's like impossible to escape. Yeah. Let's see here. No, that's who Lucy Ellis is. She used to be at the RBA, got poached by Westpac, and now she runs Westpac. Let's see here. There are some pleasing signs in prices of some goods. It's worth noting that the RBA's forecasts assume that global goods inflation declines as supply chains recover, but the global goods prices do not fall much in absolute terms. So they're saying there's a chance that the RBA's disinflationary expectations aren't met. Well, we'll have to follow up with that as we go along. I think the expectation is that the RBA is not going to hike in December, and that the February meeting is a live meeting. Yeah. By the time of the February meeting, the RBA will have the full December quarter inflation data, as well as the September quarter national accounts and other key data. We affirm our view that the RBA board would raise the cash rate at that meeting in February. Let's see here. If it sees further upside surprises to inflation or fresh evidence suggesting that inflation will decline more slowly than it intends. If things play out broadly in line with their forecasts, though, further moves would be harder to justify in that case. It would be likely that the RBA would hold the cash rate steady. Currently, we believe this is more likely outcome. The more likely outcome. So that would be Aussie dollar bill, y'all. Yeah. Aussie dollar bill, y'all. Man, the bulls really stepped in, huh? Well, I guess let's look at some closing odds. Actually, you know what? It'd be probably useful to start looking at some odds for next week here. Okay. Looking all right. So I'm not necessarily expecting 67 to get hit next week. Yeah, I'm not really expecting 67 to get hit next week. Again, was kind of surprised we didn't go and hit 67 last week or this current week. Yeah, so I would not be surprised to see us tap prices sub 66 next week here. We can go ahead and do something along this line here. Go ahead and timestamp that. It's the 1st of December. Ayo. We are now in a brand new month. Wow, check that out. 42% of the time, the low for the month of December over the last 21 years occurs between 63.9 and 64.6 here on the Aussie dollar. That's between the S1 and S0.5 monthly pivot points. Yeah. There was this outlook here. Aussie stalled around 66. Let's see here. Aussie dollar should regroup for a run to 67.23. Gotcha. Let's see here. This is the commodity side out of New Zealand. A slightly rosier, or at least less negative outlook, also visible in the shift in global growth forecasts lately. Okay. Oh, upward revisions in the estimates for both China and the United States. Higher growth figures imply stronger consumption, which means a more supportive backdrop for commodity prices, though some of those gains would be gobbled up by the additional appreciation in New Zealand dollar. Nice. So they are nice and bullish. ASB. It's a New Zealand bank, I believe. And then there's also BNZ. This is another New Zealand group. This is their monthly outlook. And they break down all the individual moves here on the New Zealand dollar currency over the last month. This break down all these little individual moves here. So this move right here, this big green candle, that was US CPI, slightly softer than the market expectations. So let's see here. November ranges. New Zealand dollar has likely moved into a higher 60 to 64 cent trading range. Seasonally, December is the strongest month for the New Zealand dollar. Beginning of US dollar downturn cycle gives us a constructive outlook for the New Zealand dollar next year. That seems to be the consensus view. Also, there's a lot of very bullish expectations for the month of December, and I can see why. If we load up the high odds for probability pivot points, you can see it's like a flip side on Aussie dollar, right? Where Aussie dollar had that big probability on the downside, New Zealand dollar has this big probability on the upside here. Showed hefty, broadly based fall from the DXY. Custodians, State Street, and BNY Mellon suggested investors were dumping the dollar at its fastest pace in a year, unwinding significantly long positions. Damn. Probably one of the reasons why November was such a great month for equities and just everything. All right. This is another one, ANZ. Talking about the RBNZ willing to hike further, as expected. Oh yeah, Wednesday, they had their meeting, the RBNZ. Not doing anything, didn't do anything. They were hawkish, so the hawkish tilt, despite recent data, that on balance has gone the RBNC's ways, particularly labor market. But there does appear to be genuine concern that the bulk of the transmission of monetary policy is now in the rearview mirror, and core inflation and inflation expectations have not responded as hoped. Okay, so they gave a bit of hawkish commentary around this particular concern, and the likelihood is like, okay, we're probably going to hike at the next meeting. So Airbnb is probably going to be hiking at the next meeting. Again, that's just what most people are expecting. That's what people who are betting on it are betting on happening. Let's see here. A lot of technical information about employment. The incoming government. New Zealand got a new government, a center-right government. So this is a bit of commentary on that. The incoming government this week announced that their first bill to pass into law this term will be to remove the labor market objective from the Reserve Bank Act. So the incoming government that's center-right leaning is about to change the mandates of the RBNZ. With passage expected late next week and an updated remit issued thereafter, we don't expect this to change the RBNZ's decisions significantly. Even without a dual mandate, the risk of slack in the labor market is a key measure of inflationary pressure in the economy, so we expect the RBNZ to continue to monitor, its employment suite closely. Alrighty. The relatively weak New Zealand dollar is helping to support milk prices. Remember, milk, what is it? Dry powdered whole milk, I think, is the largest export out of New Zealand, commodity export out of New Zealand. And let's see here. But there is considerable uncertainty and risk in forecasting this far in advance. So RBNZ is still watching home prices. The Kiwi ended November on a high note. We expect the divergent rhetoric of the RBNZ and the Fed to support the Kiwi, but perhaps not to the same extent as was seen over the month of November, with our Q4 2024 forecast at 63 cents. So only a moderate bump out of the expectations here out of ANZ. I know Westpac has a forecasts table here at the bottom. So let's see here. December 2024. Oh, wow. Looks like Westpac is actually more bearish or hawkish. They have a forecast of 62. So put 2 and 2 together, start collecting 5 or 6 more. December 24 rate price forecasts. Maybe it's around the 22 to like 25 cent range with current information. Looks like Westpac's actually bearish for the month of December here, or for the quarter of December, rather. They expect New Zealand dollar to trade around 160, at least according to this table. And for Aussie to kind of go sideways from here. All right, we got an MUFG outlook here. They talk about oil. Eurozone inflation came in lower than expected. China PMI is disappointed. Ooh. While there may be some pickup in Europe's inflation in coming months due to the removal of government energy subsidies, markets have now priced in 100 basis points of rate cuts by the ECB next year to start in April. That's what I was talking about earlier. Okay. That is insane. A 100 basis points of cuts by April. Oh, 100 basis points of rate cuts by the end of next year. And then the first rate cut to start in April. I want to read that carefully. Let's see here. They talk about India. Yeah, not much else there. JGB yield and yield curve scenarios. This is a particularly dense weekly forecast, weekly outlook that I get. I'm gonna go over this on my own time. If anyone's particularly interested in, the Japanese economy or the yen, these are pretty good. MUFG is Mitsubishi, right? So this is a Japanese bank. Let's see here. Commodities weekly. Oh, I can't see. Gold has hit a 6-month high and its record is now in play. The fuel comes from belts that the Fed is done hiking, which hampers the US dollar and treasury yields, but drives non-yielding assets incrementally into investors' portfolios. Gotcha. So maybe they have continued bullish expectations on gold. We believe that OPEC will ensure Brent crude remains in the $80 to $100 per barrel range. Gotcha. Oh, they talk about the El Nino here. El Nino and La Nina climate pattern occurrences are often brought up as potential drivers of winter temperature deviations, with Nino patterns typically associated with warmer winters and Nina with colder ones. Given the climate, patterns are a complex construct of many different drivers, with predictions typically unstable, chaotic systems and whatnot. Sensitive to initial conditions. We examined the historical correlation between El Nino conditions, the likely pattern for this winter, and temperature deviations across the US, Northwestern Europe, Northeastern Asia. We observe that whether we look across all winters or only across winters with El Nino, what's present, the positive correlation between winter temperature deviations, and the oceanic Nino index is only weak to moderate. So the strongest signal showing for the US. So they're saying, hey, it's probably gonna help, but you don't bet the house on El Nino making things considerably warmer, maybe outside of the United States. And it does seem to be making a bigger deal for heating prices in the United States, house heating prices in the United States. Let's see here. Contextual oil charts. EU natural gas demand, it's pretty darn high. Yeah, we're right there at that little spot. Yeah. We're at the top of the 5-year. Oh, wow. Panama to shut a large copper mine. Oh yeah, I remember the government declared that the mine was unconstitutional or something. I really have only read like one article on it and like a 2-minute video from Reuters, so I'm like totally out of the loop on this thing. Let's see here. To put into further context, Panama's government stated it will shut down the Cobre mine owned by First Quantum Minerals damping hopes the company might be able to reach a new deal to keep it operating. The project, the subject of mass protests from environmentalists and labor unions, produces 1.5% of the world's supply of copper. The event looks set to tighten global mine supply further next year, although there's uncertainty about how long the shutdown will last. Wow. So I wonder if they're just straight up closing down the plant or if they're just trying to get new operators in there, because 1.5% of the copper supply, that will probably make a difference to copper prices. A small difference, probably immeasurable to most people, but you know, when you're Tesla, for example, you consume a lot of copper, and that might give you 5 or 6 or 20 some odd deals, several dozen deals that suddenly now get repriced a bit higher because part of the copper you're bidding on came from that supply. So there are situations, but I don't think it's gonna terribly impact prices. I think the US dollar is going to be a bigger driver in China manufacturing growth. I think it was yesterday, actually, I brought up an article from Reuters actually saying how while manufacturing in China is going lower, the amount of copper imports into China is going up and up because they're starting to produce some EV cars, and they have, you know, Tesla and I don't know, they have their own brand over there, their own Chinese EV brand. And they're just bringing in so much freaking copper. It's like record level of imports of copper. So I don't think we're going to have to be too concerned about it. I think future EV vehicle demand is going to be a huge driver of copper prices going forward for sure. Like, if there's any sort of expectation that electric vehicle sales will turn lower, and that will probably be tied very closely to the government funding that's available for EV cars, because that's one of the things that's been getting more manufacturers actually building EV cars, is that governments are stepping in and help, you know, subsidizing these companies. And well, that's all well and good, but what happens to the willingness to keep producing these cars and selling these cars when those, you know, when that stimulus goes away, right? When those grants go away. So can EVs stand on their own 2 feet economically without, you know, a government backing them up? We'll see. There's a lot of arguments for it, a lot of arguments against it, but we'll see. It's just a risk to be aware of going forward, especially with any sort of EV or copper investments. It's just another big old risk to watch out for. All right, I think I just covered all the outlooks I wanted to. Let's see here. U.S. November unemployment report. Non-farm payrolls, December 8th. Unemployment rate, December 8th. Let's see here. Growth in non-farm payrolls continues to slow. All right. In light of these data points, we expect non-farm payrolls to continue slowing on a multi-month basis, though it may be through revisions. Softer job creation will see the unemployment rate lift slowly over the year ahead and wage growth stabilize at a modest pace. So pretty neutral looking expectations for NFP next week. Next week, RBA policy decision. At the December board meeting, Westpac anticipates the RBA will stay on hold. The move forward to December, no further upside surprises to the inflation outlook have materialized. The RBA board will instead look towards the Q4 CPI report due January 31st for a more complete assessment of inflation's momentum and the risks at hand, and that will likely drive the Q1 rate hike expectations. Because right now it seems like RBA and RBNZ, they'll probably do rate hikes in the first quarter of next year. They did get considerably a bit more hawkish, but we'll have to see how things develop from now until then. You can't just go, if there's an event that occurs 3-4 months in the future, trying to trade an event that occurs 3-4 months in the future is not super easy. It's just not. Like, what, you are bullish it right now, and then let's say you buy some asset and the price of that asset falls. Let's say you have a time horizon of 4 months, and over the first 2 months of that you have prices fall. Well, do you buy it back again? Well, what if, like, in the next week you get more data saying, well, now we have to just completely throw out the window our expectations for what we thought was going to happen at that 4-month, terminal period. You gotta be swinging along with how changes in expectations come about, because you can do all the valuation you want, but you also need to have a good understanding of how expectations change and how you create new types of valuations. What are the new spots to say, oh, it seems more reasonable or less reasonable to expect price to go up or to go down? Well, that comes from having a set of expectations and figuring out where those expectations come from and really kind of refining that whole expectations process. Why do you have the expectations you have? Does anyone else have the same view as you? Does anyone else have the same expectations? And one of the easiest ways to get good at figuring out, okay, why do people, let's say, have the consensus view, is to go down and just literally read what people are saying in consensus expectation reports. And then when you go and you read people who deviate, at either ends of the distribution, super bullish or super bearish, you have a frame of reference and already some basic conceptual understanding of what the consensus thinks, why the consensus has some sort of expectation. And then when you go and you check the people who are pretty deviated from that, you can say, oh, well, this is the component of that analysis that's different, that makes them more bullish or bearish. And then you can review that component and say, well, does this actually make sense? How reasonable is it that this lines up? What's the extra information here that they're taking into account? Are there any assumptions that they're not necessarily telling me? Or is this a really sound argument? Is it something that is such a sound argument you feel compelled to do a little bit more research into it? So it's always important to be constantly going out, learning more, researching more, about what everyone is thinking. So then you can build up a good, solid worldview and get a solid, cohesive view of the universe of all the different risks that everyone else is looking at. And, sometimes it's not going to be totally relevant to a retail discretionary trader to know, like, some guy who's doing, currency swap risk for his business, but it's just important to know those things exist out there in the world. So then when you do look at an assortment of risks, you can have this generalized idea of, oh, that might impact that guy doing that swap trade, or that yields trader, or these businesses doing this type of transaction, or da 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 da. And you don't need to overthink it. You just need to be roughly familiar with, just in general, what kind of businesses are out there, what sort of ways they participate in markets, because not every market participant is there to make money. Not every market participant is there to trade. So just figuring out who are the market participants, why are they participating in the markets, and just learning more about what's going on. Why are they doing what they're doing? Why are they moving prices the way they need to move prices? It's insightful, keeps you on your toes. I don't know. I'm the kind of guy who finds looking up and reading that sort of stuff as kind of interesting, how people participate in a market. So that might not be necessarily everyone's cup of tea, but if you're really significantly interested in learning more about markets and trading, it's a very nice topic to study and to get to learn more about. And I don't know if there's anything else in this outlook. Let's see here. Yeah, seems like we gotta wait till end of January, beginning of February for anything else that's the next round of super significant New Zealand and Australian economic data. The US data that's going to be coming out over the next week or two, that'll probably end up being a bit more significant. Which is why a lot of outlooks that I've been going through outside of these ones that I've looked at here, they have a more bearish skew to their expectations. Speaking of, let's hop into these charts. I've been talking for so long and going over these outlooks for so long. I mean, I've been streaming now for about 15 minutes, so I think now would be a good time to kind of reward the guys who've been hanging out here, listening to me rant in the chat and whatnot. You guys, go ahead and give me a few charts you want me to check out and do analysis on, and I'll go ahead and do them. For the guys for you guys who've been sticking around here. Let's check this out here. Yeah. Again, I just be careful going into that next week. While I would like to see more overlap in the seasonal data here and the non-seasonal data here, this is just such a bad bad range. It's like a lot of your lows this weekend occur here or here or here. I mean, I'd say outside of taking shots like right at 65, 0.605, 60, well, 0.608, like outside of this particular range and having like a stop at 603, 602, it's like, man, any sort of long shots have to kind of be, you gotta pump the brakes on any sort of long shots here, just due to that little bit of extra risk there. Yeah. Let's go ahead and check this out. So CAD yen is actually a pretty significant mover today. Oh my. Look at that, man. 42% of the time your low comes in here. There's your peak. It went to the very edge of that peak. Wow. Yeah, this is where the seasonal data can be helpful, telling you, hey, maybe skew to the light, to this half of the distribution instead of this half of the distribution. Yeah, so maybe the bottom half of that peak, like this spot around here, call it 109 next week, or like 108.5. Those would be maybe the two spots I'd be interested in next week on the CAD yen. Look at euro dollar more closely. Sure thing. Yeah, looks like we're also heading to that spot, right? We'll probably end up like another 15 pips lower. I would not be surprised. What do I think about WTI? Well, let me do this one first. I'll do WTI in just a sec. But also look at that, a lot of your lows come out around here. Yeah, I think right off the bat, I think probably below 1085 is definitely in the cards. I mean, you got a peak right there at 1085, so yeah, I'd say this spot is reasonable for next week. That would be my expectation. And I wonder if it also lines up on the month. Yeah, you see? So now we have our monthly range probabilities and our monthly probability pivots. You got a peak right there. Right there. Yeah. Yeah. I would, yeah, I'd maybe take a couple of shots there. So let's see here. What's the next one? WTI? Ooh, WTI was, yeah, the kibosh came down on it. Man, that is pretty far out move there. You can see all these small boxes with these small probabilities. This is very low density. So this is the edge of like your most moderate of density. Like this is all your tail risk. This is kind of like your cutoff zone before you get into the tail risk. So you get people stepping in around here. It's like, no, we're not doing this yet. And I think that's I'm not trading oil. I'm not exactly sure why this happened. I know OPEC came out and said that they were doing some production cuts, like another 1 or 2 million barrels. Russia was also doing cuts, if I remember correctly. So I'm not... If there were production cuts, is this a demand thing? Did demand get shot or something? Anyways, oh, that they didn't cut more. Oh, so expectations weren't met. I thought the expectation was, though, that they were not gonna change anything, and if not, they'd cut a little bit. Maybe, I don't know. I'll have to read through some commodity. I mean, if we want, we got let's see here. All right, so energy, crude. There are no good options for OPEC Plus for its 30th of November meeting. All right. As we documented last week, our base case 70% probability is for the group to confirm existing cuts and the extension of Saudi and Russian voluntary cuts in Q2 of 2024. Well, up to that date, with risks a 30% probability of half to 1 million barrels per day, larger group-wide coordinated output curves. Both scenarios, in our view, skew neutral on prices. A central question is how long the current regime of active market management by OPEC Plus could last. For now, Saudi Arabia's high fiscal oil price break-even means it remains motivated to defend an $80 per barrel oil price floor. And this is on crude, the chart we're looking at here. But the flip side is a loss of market share. The last time Saudi Arabia produced less than 9 million barrels per day outside of the COVID pandemic and the September 2019 attack on its facilities was in 2011, when the world was consuming less than 90 million barrels per day of crude oil. We expect OPEC Plus will ensure Brent remains in the $80 to $100 per barrel range by leveraging its pricing power, with 80 being the floor and 100 being the ceiling from spare capacity. While higher non-OPEC Plus supply or lower GDP are downside risks to prices, we estimate that Brent would remain close to $80 unless OPEC became less assertive. This range should offer robust spot and carry returns, and we also see hedging value against geopolitical supply shocks. So this looks like a bullish call. I would agree with this analysis. So long a relatively soft landing actually occurs, it seems like that sort of analysis would hold. So we're currently on crude, like this is the light crude futures. We're at 75 right now, and we've been holding it for pretty much the last 3 weeks. pretty flat, low distribution. Oof, that's not good. You see how we have a big chunk of highs or tops for the month here in December below the monthly central pivot? So we have this 25% plus this 2.5, so 27.5% of tops over the last 40 years during the month of December on crude. The top comes in below the monthly central pivot, which is not great. And even then, if you do go past this central pivot, it's maybe you're getting to like 82, 83, like at the high end of it. Yeah, like even the ranges don't say 82, 83. Like this is the edge case. That's like 80. I could see 80 seems reasonable, but there's like a non-zero chance like the top for the month could be coming in here. There's gonna be some people taking shots on the short side for sure for the month. I'm not so certain myself, which is why I'm not trading oil. But I'll sure do some analysis on it. Yeah, this spot around here, probably call it just 73, mid 73s. That would probably be an especially good spot. Though it's not objectionable to taking shots here in the 74 spot for the month. Let's check it out for the week. So let's see here, next week. Yeah, you could see 74, the whole 73 to 75 range kind of in play there. Yeah, 80, 79 in play next week. Man, look at that spot. Nice tap on that. Yeah, I'm not too sure whether to expect oil will move up or down first. I don't know if we're gonna if the next 2 or 3 trading days of next week are gonna be on the bullish side or the bearish side. I can look at those spots and say, oh, that would be a nice target for a bull or a nice target for a bear based off these particular valuations. But I'm not quite sure how to actually do the execution on oil for this particular week up ahead here. Yeah, I mean, just because I don't know how to do it doesn't mean you might know how to figure out on your own, autonomously, how to do it. Well, that's nice risk on going into the end of the week for CAD. So CAD is like one of the few currencies that's actually performing well against the dollar right now. Oh man. Yeah. That like 127 spot looks like a good top for next week. Maybe I'd skew to the upper side of this R1. Yeah, so I'll set an alert right here. Let's see, let's look at our closing odds here. Pretty freaking flat. Yeah, that's a bit still on the harder side to figure out. Yeah, if I had to say, maybe it's something like that. On the pound dollar. Man, that's quite a lot of your lows right there. Yeah, I would not be surprised to see the low come like right off the bat. Around like it goes in, it taps 126 and runs away. Would not be surprised if that happened. All right, let's see how that trade plan holds up. Who knows? Maybe it happens in the reverse order next week. All right. Man, been going for an hour and 11 minutes now. I think I should probably mention that if anyone watching the stream's interested in these indicators, to get the trial and sign up with the Black Friday discount now because it ends. Like that discount's going away on December 3rd, which is on Sunday. So if you want 20% off on these indicators, do that. But also, again, you can sign up with the trial and just try it out. You know, I always hate that. It's like, oh, can I try out your indicator? Like, no, you gotta actually buy. Well, then how do I know if it's like a good fit for me? I really don't like no trial policies on indicator and software and stuff. It's like, well, how do I know it's actually gonna work for me? So I always give, 10 days. That's definitely generous. And you'll be able to keep your discount when you do sign up for the trial. Yeah. Do you have entry criteria, or you hit it on price? pivot point level. No, dude, I just use my probabilities and I do my research. So I try to figure out what are the consensus expectations from market participants by reading research that's available out there. And then I look at my indicators here to help me figure out what are good valuations based off some different criteria. So probability pivot points gives me seasonal data. And then the range probabilities gives me kind of a cumulative view of the distribution of highs and lows. So all I try to do is filter my entries so that then when price is in a spot where the probabilities are more significant, I'll go ahead and be willing to take shots when the odds of me really hitting my shots out of the park are higher. Now, there are periods like during COVID, and I traded COVID, I did well during COVID. I didn't use any indicators for COVID. The most useful bit of information that I was getting around what I needed to do for trading during COVID was actually being subscribed to the Federal Reserve's email list. And when I think it was, I'm starting to forget the dates now, but March 21st, I think, the Fed sent out an email saying, hey, we're going to open swap lines with all the G7 or G5 foreign central banks. So that's BOJ, BOE, ECB, RBA, RBNC. They opened swap lines, which essentially is, okay, we're going to let these central banks open an account at the Fed, and we're just going to inject and just money printer go burr into those accounts and flood them with US dollar liquidity. And then that's where all the inflation came from. But the US dollar got so strong because everyone went so risk off. The world was going to crash. It's like everyone went in the dollars. So the only way to correct that was just print as much money as possible, because otherwise the world wouldn't financially operate. So they went ahead and they did that, and they said, oh no, it was on March 20th they announced that swap line. They pre-announced it. And then on March 23rd, they sent out another email saying, okay, it's officially intact. And if you go to any chart on TradingView and you look at the date March 23rd, 2020, there's like 80-90% odds that is the low, the COVID low on that chart. So let's test that out here. We want to do 2020, 03, 23. Oh my god. See, no indicator could tell you, oh, perfectly buy here, right? Because the extra bit of information, I mean, understand that there are people who participate in the markets, and there are things that motivate them to buy and sell. So if there is a crisis going on, what is important to understand is what are the things being done to support and help and assist people in that crisis. Is that support being given? Because if the support wasn't being given, pound dollar would be parity if it got that bad. Or if COVID was a more significant disease, right? If it spread more significantly and was more lethal, that would have also had a more significant impact. So Yeah, but you could just go to any chart. The one I traded was here on the CAD dollar. If I go to daily chart, this is what I traded. I was going long here. That's where I was heading long. And I was hearing whispers of this thing in China. All throughout here. I was watching a lot of Sticks, Hex, and Hammer. And every single video he's saying, hey, make sure you like stock up on food and stuff. And I stocked up on food. I built a pantry. And I put like 4 or 5 months of food in there. And I built it up over like 3 weeks during this whole area, and I started preparing for my dollar longs, and then the dollar longs came in, you know, quick 1,000 pips. But you know what was really cocky? When I would go into trading rooms, and when I was getting those emails from the FOMC, I was like, oh, I went ahead and I did the research and I figured out what swap lines are. I think I should go short the US dollar here. And there's people, you know, with their head on a swivel like, what, why? Why would you do that? And then it was another 500 pips the other way. Oh, man. Like, of all the things I could have got correct, I'm so glad I traded this correct with pretty much no, like, all the indicators were superfluous. The thing that was able to move the market are these larger institutions and the economic data that signals their policy. So it's important to do that research. It's important. Alrighty, you guys. Now with the story time over, and it's a good rehash for me because I'm gonna be celebrating tomorrow. I got a birthday to celebrate tomorrow, so it's all gonna be well and good here. Alrighty, you guys. We've been going now for 1 hour and 20. I think it's time to call it now. Again, thank you guys for watching, who've been sticking around listening to the stories and the analysis with all the caveats it has, but still, I absolutely appreciate it. And if you want to hang out with me after the stream, I'll still be in the Discord. I'll be doing some research stuff in the Discord. But if you want to hang out, come hang out in like the trading room or the general voice chat. All good stuff in there. And don't forget that Black Friday code ends on the 3rd. So start your trial with the code to be able to take advantage of that. Alrighty, guys. In a bit.